If the Federal Reserve cuts interest rates in September, will United States housing momentum improve, or is that hope already priced in? In this video, I will show what changed in the past few days, the mortgage numbers that actually matter, and for United States companies for your homework list. This is education only. Please do your own research and speak with a licensed financial advisor before investing. Rate cut odds for the September 16th to 17th meeting moved higher. The market now implies a very strong chance of one cut. But Federal Reserve officials are still saying the decision depends on incoming inflation and employment data. In other words, the meeting is live, but not guaranteed. The 30-year fixed-rate mortgage averaged 6.58% in the week ending August 21, 2025. That is the latest weekly reading available. Mortgage rates move with the 10-year United States Treasury yield over time, which means a Federal Reserve cut can help. But the 10-year yield, inflation expectations, and Treasury debt issuance also matter. Expect stair steps lower rather than a sudden drop. If mortgage rates ease, volumes usually improve first, margins later. Start your reading with the latest results and guidance from these builders. Toll Brothers, ticker symbol TOLL. In the third quarter of fiscal year 2025, Toll Brothers reported approximately $2.9 billion in revenue and $3.73 in earnings per diluted share. With record third-quarter home sales revenue, management highlighted an average delivered home price near $974,000 and solid luxury demand. D.R. Horton, ticker symbol DHI. For the third quarter of fiscal year 2025, D.R. Horton reported $9.2 billion of revenue and $3.36 in earnings per share, beating estimates even as incentives pressured margins. Management discussed targeted incentives to support affordability. Lennar, ticker symbol LEN. For the second quarter of fiscal year 2025, Lennar reported $8.4 billion in total revenue and $1.81 in earnings per diluted share. With gross margin compression as incentives increased, the latest mortgage monitor from Intercontinental Exchange shows that about 2 million borrowers were in the money for a refinance at early August rates. If the 30-year rate falls below 6.38%, that pool rises above 3 million. And at 6.12%, it approaches 4.8 million. That is why small changes in rates can unlock lender volume before builder margins fully recover. The Federal Reserve could cut less than markets expect, or guidance could sound cautious. Mortgage rates may not fall quickly if the 10-year Treasury yield stays elevated due to inflation concerns or large Treasury issuance. Builder margins can lag because incentives often persist to support sales pace. For a United States housing watch list into year-end, start with Toll Brothers, D.R. Horton, and Lennar. Track the Freddie Mac Primary Mortgage Market Survey every Thursday, the Chicago Mercantile Exchange Group FedWatch tool, ahead of the September 16th meeting, and read company earnings and guidance rather than headlines. Housing is one of the most rate-sensitive areas of the United States economy. If borrowing costs continue to ease, companies connected to home building and mortgages could see higher activity. For investors, that creates an area worth monitoring closely, because shifts in interest rates often translate into real opportunities.